it's Ariel
And Jason.
from Fix My Books, and today we are going to be talking about the types of CRA reviews and taxpayer rights.
Very exciting stuff. So, CRA reviews. We're going to cover what is a CRA review, the difference between a review and an audit, the types of CRA reviews, how to respond to a CRA review, common mistakes to avoid during a CRA review, and taxpayer rights and CRA obligations.
Okay, so what is a CRA review? A CRA review is a process where the Canada Revenue Agency examines a taxpayer's return to ensure accuracy and compliance with tax laws. Reviews help identify errors, discrepancies, or potential fraud. So a review is not an audit. A review is less formal and more common than an audit, and reviews often involve checking specific claims or information, while audits are more comprehensive and in-depth. So usually, if you fail a review, it could lead to an audit.
Yeah, you'll meet reviews quite regularly if you're preparing taxes or in bookkeeping. Especially in bookkeeping, if you're dealing, you'll be dealing with a business, so you're having fairly common HST,
reviews,
GST
expense
reviews.
Yeah. One really common review is the payroll review. So if there's a discrepancy between your payroll that you submitted, like in the T4 summary, and like the payroll you're declaring on your tax return, that could lead to a review because there is a discrepancy.
There's also that funny review that happens when people don't know how to file the T4 summary correctly, and they double file it. But that's another story. And, some individuals get met with this, but individual reviews, we'll get into that. And that's fairly common. A low percentage of returns are reviewed or audited, but you'll probably meet one in your lifetime.
Okay, so the types of reviews. So we're going to go through the types of reviews, including the pre-assessment, processing, matching program, and other types of reviews. And each type serves a specific purpose and follows a different process. We really won't get into like the process of each type of review. It will just be an overview of like what this review means, kind of what they're looking for, etc.
When you're responding to a review as well, it kind of will follow a similar process. So there's no need to go over it. It's just the information being requested or looked at, examined is slightly different.
Okay, so the types of CRA reviews. So number one is a pre-assessment review. So it occurs before the notice of assessment is issued. It focuses on verifying information such as income, deductions, and credits.
So when you get one of these, usually what would happen is you e-file your tax return, and then it's slow in issuing you your express notice of assessment, or it says it's gone into a review. That's what this is. So it's looking at, there's something in your return that was just not right, and it may have a manager or an officer look at it just to double check, or it may be waiting for some other slip to be coming through. There's just something a little odd about it, but usually 99 times out of 100, it's just going to go on and be processed, and it will be fine. And the next one is a processing review, so conducted after the notice of assessment is issued, may request additional information or documents to verify claims. So like I was saying before, the manager gets, it gets looked at in the pre-assessment review. A manager looks at it and they either tick it off and say it's fine, or now they need to verify something. So say, for example, you may have claimed something really silly, like you may have claimed $10,000 in medical expenses, for example, and now they need to just verify that because that's such a large claim, and it's going to produce quite a big credit on your tax return.
So next is the matching program, where it compares information on tax returns with data from third parties like employers or financial institutions. It identifies discrepancies that need to be resolved. So an example of this is the Pensionable and Insurable Earnings Review, which is a peer review, PIER. So basically it's where the reported CPP and EI doesn't match what the employer reported on the T4 and what the person is submitting on their tax return. It could be because they had like multiple employees for the year, or another example is if, you know, you maybe missed a slip like from the financial institution, like the interest.
Yeah, that's what I mean.
Yeah.
So say the financial institution issues the slip and you've filed early or something like that. You filed early before you even received the slip, and it's actually on your CRA account already.
But you didn't declare it.
But you didn't declare it when you entered it in TurboTax, or you had a filer do it for you.
Next is the review of business activities. Reviews specific to business income and expenses ensures businesses are reporting accurately and claiming legitimate expenses. So there are certain types of expenses that the CRA likes to review a lot, which is like meals and entertainment, travel. Those can be abused by some businesses. So they do have what I would say like high risk expense types that they like to review a lot.
Yeah, motor
Vehicles,
vehicle would be a big one.
One of them. So they can review, you know, they'll ask, okay, give me like your 10 largest expenses for meals and entertainment, or like your 10 largest vehicle expenses, and then they'll review that and make sure those are all legitimate claims.
So home office expense reviews. This is fairly common if you've got a sole prop, or if you have a company and you're claiming home office expenses. And it's really to just double check that what you're claiming is correct. And also if you're claiming, you know, things like massive amounts of maintenance or upgrades or anything like that, you know, are these within the guidelines of what you can actually claim? You know, and also, you know, are you eligible to actually have a home office expense? That's another one.
They also could review, let's say if you're claiming 50% of your home as a home office, they could ask for like the floor plan, square footage, stuff like that. They could review that.
Yeah, so just be aware of that. So charitable donation reviews. This verifies the authenticity of charitable donation claims, ensures that the donations are registered charities and properly documented.
We see a lot of people...
Yeah, we see a lot of donations or attempted donations, and we see a lot... I actually get this quite a bit, charitable donation reviews, and it's usually because someone is claiming a donation that is quite large. Right? I've had a couple of people donate thousands and thousands of dollars, and you know, this go through a pre-assessment review and then through to a charitable donation review. And that's just fairly normal because you're getting quite a sizable tax credit on your return. You know, the CRA obviously want to check the authenticity of that claim.
Also, I'd like to note that if it's a charitable organization outside of Canada...
Yeah, sometimes it's not going to apply unless it's a specific one that's the Queen, or now the King, has deemed okay to donate to.
Yeah, so watch out for that. Just because you donate doesn't mean you can automatically like claim it on your tax return. Yeah,
so if you're donating to UNICEF, well, not UNICEF, that's not a good one. If you're donating to like Red Cross or Red Crescent movement or something that, you know, just a random charity, or even just a GoFundMe, for example, don't donate to a GoFundMe and think that it's claimable, because sometimes it's actually not. Most of the time it's not.
Yeah. Okay, and requests for information. The CRA may request additional information to clarify certain claims. Responding promptly with accurate information is crucial. So what would be an example? I've never had one of those.
Oh, request for information. I've had that a couple of times. So, you know, if you've got child care expense deductions, then, you know, they're asking for those receipts, especially if it's like someone's been caring for the kids. Medical expenses is a big one. So a lot of people will claim, pretty heavily medical expenses. It's surprising because we're in Canada, but they will claim medical expenses. And, when you're into the thousands of dollars in a claim, then, they're asking for all of these receipts, and it has to be full receipts, not just something you wrote in a piece of paper or a bank statement or something like that.
Yeah, and I think people also get confused with this in terms of medical expenses, because there are some medical providers that you actually cannot claim. There's a list that you can claim, then there are some that you can't claim depending on the province. For example, if you have a massage therapist in Ontario, you can claim that, but not in Quebec. Yeah. I found that out.
Yeah, so it's very particular, and before you're claiming any medical expenses, just a word of advice, always double check on the CRA website, especially if it's something that you would need to have a T2200 for, or any sort of prescription. So make sure you've got those.
Mm-hmm. Next, how to respond to CRA reviews.
So read the notice very carefully. I can't state this enough. And understand what information or documents the CRA is requesting. Check the deadline for your response. So number one, make sure that you really do understand the information they are requesting, because you do not want to give them more information than is necessary, nor do you want to give them the wrong amount of information or less than is necessary. But check the deadline for your response. If you do not think you are going to meet the deadline, simply call them and ask for an extension. They may give you an extension of 30 days, provided this is, the first issuance of this document. Just don't ignore it until the last day, and then call one of us or call someone else in the industry and say, please help me with this, and it's the last day, because that's not the right way to do this.
Yeah. Next is gather the required documents. Again, when you get the notice will actually outline everything they want from you. So it's very easy to follow if you have, obviously you should have the receipts for everything that you're claiming. So it is easy to follow when you have that. So collect all necessary documents that support your claims, receipts, invoices, statements, etc. Ensure that documents are organized and complete.
Also with this, if you think that they are requesting too much information and it's outside the purview of what they're actually trying to examine, I'll jump to number 4 here, seek professional advice. Go talk to someone, because it may be too much.
Mm-hmm. Okay. So once you have gathered the required documents, submit your response. Respond within the specified time frame. Again, it will be in the notice when the deadline will be, and provide clear and concise explanations along with supporting documents. I've dealt with a lot of CRA reviews, especially because we are in the e-commerce space. So a lot of our clients get large HST refunds because they sell a lot outside of Canada and buy their supplies in Canada. So that ends up with large refunds. So I'm very used to this. Just give what the CRA asks for. If you have a good bookkeeping system, you should have it. But also, if you don't have the required documentation, better not claim it on your tax return.
Yeah, and if your bookkeeping and record keeping is just tragic and terrible, and you are aware of this, and then you get one of these notices and you need to deal with it, on the day that you receive the piece of paper, that day, make a phone call to someone to fix this for you. So, like us or anyone else, it doesn't matter. Make a phone call to have a bookkeeper look at this, fix it up, because if you don't have the correct records, that's actually an offense.
Yeah.
So you can be fined quite a sizable amount of money for that. I think it's between $1,000 to $25,000.
Yeah. So just make sure that you read the notice carefully, just follow the instructions there, and if you really don't know what to do, seek professional advice. So here, some common mistakes to avoid.
Missing deadlines. Failing to respond by the deadline can result in penalties or reassessments. Always note and adhere to response deadlines. So just make sure you follow the deadline. It's very simple.
Or number 2 is incomplete documentation. Submitting incomplete or insufficient documentation can lead to further scrutiny. Double check that all required documents are included and legible. So that's what I mentioned a while ago. If you fail a review, it could lead to an audit. If you don't have the required documentation that they're asking for, they could disallow the expense or ask for other documents to supplement what you gave them.
And don't think that they're not going to see that it's missing, because they're going through a checklist. They will note that it's not there. Mm-hmm. Inaccurate information. Providing an incorrect or inconsistent information can trigger additional reviews or audits. Ensure all information is accurate and matches the records submitted. So very simple. Don't make things up. Don't provide garbage to them. Frankly, it would annoy anyone if you did that. Mm-hmm. And just make sure that all the information is there and what they need is there.
So, for example, if you're claiming medical expenses or like a certain medical expense you've listed as $500 and you submit a receipt for $350.
Yeah, that doesn't add up. You know, and then you find out that on the rest of that receipt is a bunch of personal stuff that you bought from shoppers. You know, that's offside, and they'll come down quite heavy on that.
Okay, the number one mistake to avoid, and this is what we've been saying for a while, is ignoring CRA requests. So ignoring or delaying responses to CRA requests can lead to negative outcomes. Always address CRA communications promptly and thoroughly.
So a lot of people come to us, and I've talked to some American friends of mine across the border where they prepare taxes, and we have the same story where you'll have a person, sit on the call with you or walk into your office, and they've received a letter. The letter may be a year old, but they seem to believe that not opening the letter prevents any sort of negative news from occurring. And they'll open it in front of you, and lo and behold, it's a request for information or a review or an audit or whatever. And
it's not an excuse.
It's not an excuse. Just don't, when you get the letter, don't be afraid of it. Open it and go, take a deep breath, go, I've got to deal with this. I'll call, fix my books. I'll call anyone. I'll call A, B, C, D, E, F accounting, whatever. Just deal with the situation when it comes along, so that way the CRA isn't just getting more irritated with you because you're just ignoring them.
Okay, so taxpayer rights and CRA obligations. So if you are under review, you do have rights. So it's good to know what you can and cannot do and what the CRA can or cannot do as well. So the Taxpayer Bill of Rights. Understand the rights outlined in the Taxpayer Bill of Rights. Rights include fair treatment, privacy, and clear information.
We can provide a link to this down below as well, so that you can just access it if you need to. But know that everything on there is your rights. So right to information is one of them. Taxpayers have the right to know why information is being requested and how it will be used. CRA must provide clear and understandable explanation. So if you do get one of these letters, you can just directly ask them, why do you want this information? What's it being used for, etc. They may reference you to the letter because the letter is generally quite clear. But if you're failing to understand that explanation, you can call them and ask them further.
So the right to appeal. So taxpayers can appeal CRA decisions if they disagree with the outcome of a review. The appeals process allows for fair resolution of disputes. So again, like previously, I think we already mentioned the appeals process.
Yeah,
like
we did a video about appeals.
And like objecting and appeals and things like that. So it could depend on your situation. So always just consult a professional if you do want to appeal.
Yeah. CRA's obligations. The CRA must conduct reviews fairly, impartially, and with respect for taxpayers' rights. CRA is obligated to provide clear and timely communication throughout the review process. So fairly standard. They've got their rules, they've got their guidelines, they've got their practice and procedures manual, and they have to abide by these things and also abide by your Bill of Rights. So just make sure that you understand all these things when you're dealing with the CRA, because you can cite them in objection, and you can cite them in your appeal, etc.
Okay, so that's it for today. We hope you guys like this video and learned something about the CRA, the types of reviews, and what you can do as a taxpayer, your rights, and how to respond to these reviews.
And if you're dealing with this right now, hopefully this has armed you with some information.
Okay, so guys, don't forget to like, share, and subscribe to the channel. And once again, this is Ariel
And Jason.
from Fix My Books. Have a great day.
Cheers.